So just when you think that you've got a grip on the markets, they do exactly what you don't expect. After the weekend to last week's trading, we were looking for a rough night on Wall Street on Monday night. Instead, we got a rally. Having seen that turnaround and the strength come back into the market, we were looking for a continuation of that. But instead, we got a sell-off. And I think that tells the story of this week. Market moves are likely to confound. So last night, we saw the S&P 500 down 0.8%. The NASDAQ was down almost 1.5%. And that sort of contrasted with the big gains that we saw in the ASX yesterday, up almost 1%. So it does look like we're going to have a whipsaw week, and we might see a similar reaction in the Asia Pacific region today. And remembering that Hong Kong has been the high beta market, emphasising the moves in either direction, it might be the area that traders are focused on today. But last night, it was the Magnificent Seven that led the sell-off. Nvidia was down almost 3%, Microsoft down a very similar amount. Bitcoin also hovering just above that 76,000 mark. And to be frank, that chart looks terrible. If Bitcoin falls through 72,000 US dollars a coin, the technical outlook will deteriorate significantly. So while it holds above that, things are mildly positive, but a fall through that level would be concerning. Now, yesterday, gold, silver, platinum all rallied back. These do look like dead cat bounces. We have seen a clear bursting of the bubble in gold, and that's likely to spread across the precious metals complex. But nonetheless, big rally yesterday does suggest that some people have been waiting for a buying opportunity in those precious metals. US job openings are out tonight, unlikely to make a big impact, but we do have earnings from Google and from Eli Lilly and Novartis. And both of these pharmaceutical groups will speak to the overall health of the US economy. But our focus today is the AI, and the counterpunch is coming. We've seen a lot of optimism around the prospects for artificial intelligence and its ability to deliver productivity gains across the board. Now we're seeing the market starting to price the people who might lose out of the AI delivery. Anthropic's legal AI tool can review contracts, and that has meant that there's been a lot of pressure on not just legal service providers, but data providers overall. And so we've seen groups like the S&P 500, S&P down 11%, FactSet down 10.5%, Moody's down 9%, Equifax down 12%. All of these data providers are under pressure because the perception is that the productivity gains that come through AI will be delivered against those who are currently charging for those data services. So it's a broad fear that the software and the data providers, consulting groups, are likely to see their lunch cut by AI, and that slashing of their earnings is the cost. It's the flip side to the optimism that we've seen around the potential for AI. So legal is really just the latest sector that AI is steamrolling. Expect to see more sectors knocked over by this potential for productivity gains. Turning to our watch list today, Gartner, a research advisory group, fell 21% to a 5-year low. Speaking directly to that AI thematic, it's led the S&P 500 declines. However, its earnings result were better than expected. 1.8 billion in fourth quarter revenue. Its forward guidance, however, was very poor. And especially on the consulting side of things, Gartner has a very pessimistic view, echoing that impact of AI on their sector. A number of analysts have kept their hold ratings, but it's pretty clear the share price for Gartner is under extreme pressure. Perhaps more importantly, Advanced Micro Devices reported last night. Now, it's down 7.3% post its result. This is post-market trading, which is thin and not always a good guide, but nonetheless, the forecast that came out from AMD really disappointed. Sales for the fourth quarter were up 34%, and earnings were up more than 200%. So the numbers here in the past have been very strong, but it's the outlook that appears to be dominating the result. Q1 revenue was 9.8 billion, a little bit of a miss. Analysts were around the 10 billion mark. It's not a huge miss, but nonetheless, this is an unforgiving market. And despite strong buys from a number of analysts and expectations of tens of billions of dollars in sales by 2027, it does look like AMD shares will be under pressure today. Turning to local market, Amcor's second quarter sales were up 68%. Now, Amcor as a packaging group not just speaks to its own results, but to the overall health of the Australian economy. It's realising gains from acquisitions, so some of this has to be taken with a grain of salt, but nonetheless, EBITDA was up 83% from the previous full year. EPS up 12 to 17%, depending on how you rate it. A number of analysts have a buy rating on Amcor. The stock's down 23% over the last 12 months. And it does speak to pessimism about the Australian economy. Those who are optimistic about the outlook for the Australian economy and therefore the packaging that comes with it might be looking at Amcor today.